do think it has a bit further to run, but if you look at the relative performance of value versus growth, really it changed pretty dramatically with the global financial crisis and the launch of QE. So I think as long as we have even more so now a more QE environment, it's hard to see that longer-term dynamic really changing. So in the short term, Treasury yields probably have higher to go. I think tech stocks certainly are vulnerable given the valuations today. So you can see that dynamic persist for a bit, but kind of that longer-term trend that's driven growth to outperform value, we don't fundamentally see that changing.
And the other part of the debate here is, of course, the disconnect between the real economic data that's coming through, continuing to paint a very dire picture of economies around the world, and the fact that we have seen equity markets rally so strongly, with the S&P now erasing all of its losses for 2020. I mean, is this just a case of markets discounting the future as they are supposed to, and investors looking out to a long enough time horizon to feel confident from an earnings perspective? Is that the justification here?
Well, that's what you'd like to believe, that the market's pricing in the future path of earnings. But when you have violent swings in prices, we know that what was true today isn't necessarily going to be true a week from now. We were concerned already about the recovery that we've had in the markets. And, you know, given the rally that's extended even further this week, you have a choice. You either become more concerned or you capitulate. And unfortunately, we're still in the more concerned camp. I mean, at least before, the level of the market was consistent with a modest drop in earnings through the end of the year of around 10%. But now you've got markets that have recouped all their losses, but we still think there's going to be an earnings decline. So the only way you square that circle is to accept higher valuations, and significantly higher valuations at this point. And, you know, that's not a really good investment case, we think, for the long term, to say that valuations are high, but that's not a problem. They can stay high indefinitely. So we do think there is a risk. We're anticipating that earnings are not going to be able to support the current level of equities, and then ultimately equity prices are going to have to reflect that.
But Daniel, good morning to you. I haven't ever heard a man in your position or a lady in your position coming on without telling us, oh, we're not traders, we're investors. We're investors on an average for 5 to 7 to 10 years as well. Surely you've just got to look a little bit further out for your entry point. This is about longer term fundamentals rather than worrying about the next quarter or the next earnings season, isn't it?
Yes and no. I mean, absolutely. I mean, equities kind of always go up. So ultimately, whatever you buy today and at a certain time horizon, the prices should be higher than they are today. And nonetheless, if we're looking at those relative valuation or relative investment opportunities, which ones are the most attractive? Right now, if we say look at equities versus credit, equities are relatively unattractive. You've still got all the risk in equities as you do in credit if the economy does disappoint, but thanks to central bank support, you do have some downside protection that you don't have in equity. So not to suggest that risk assets over a long enough horizon will outperform, but right now we do think there are risks, particularly if you look at the rallies that you've seen, you know, for example, in airlines, which is something we actually had anticipated. Nonetheless, kind of the long-term sustainable earnings growth model for those industries remains challenged until we're much, much closer to a vaccine. So I think there's still a lot of near-term risks we need to keep in mind around equities. You know, the risk of revisiting the lows from last March, which, you know, now seems quite a long ways away, is still there.